Afternoon and welcome to this webinar. I'm Robert Kelly from Stewart Title. We are very pleased to be sponsoring this event and to be working with two of our favourite organisations, IQ Legal Training and IREDD. The purpose behind this webinar is to explain the availability of commercial policies in commercial property transactions. I think over the last few years there's been more of an acceptance of title insurance in residential transactions, but it does have applications across commercial and development situations. And we work very happily with IREDD and with Bisma and her team. And I think the advantage for you as lawyers is that you get the incredible experience and knowledge of Bisma and her team. They're knowledgeable both about insurance products, but also about your problems and how you interact with title insurance. So it really is a great asset to you to ensure that your problems are addressed properly, and that when insurers are instructed, actually your message has got across to them. So very pleased to be involved in this. I'll say no more because I know there's a lot to talk about, and hand over to Ian.
Thanks very much, Robert, and good afternoon to everyone, and thank you for joining us. Yes, I'm delighted to say that Stewart Title is sponsoring today's event, and that I have Bisma Halling in attendance today. Bisma is the client executive of Intelligence Real Estate Due Diligence, who are part of Adler Fairways. Have I got that right, Bisma? I think I have.
That's right, yeah.
Yeah, jolly good. So, Bisma, if you would start the presentation just for a bit of housekeeping, really. The webinar will last approximately 1 hour. It is recorded. There are slides that accompany the presentation, which you can make available to you. As far as questions are concerned, it would make sense, rather than interrupting Bisma, to deal with questions at the end. And if that's all right with you, Bisma, you'll deal with any questions at the end of your presentation. I then, unfortunately for you, but fortunately for me, have some time to share with you my thoughts and my views with regard to title indemnity insurance in a commercial context. And I've got some points to note and some points to explore. And then, if we may, Bisma, we'll have a sort of final Q&A at the end of the session. Bisma, if anyone wants your specialist advice and guidance, we have a slide with your contact details, and I think you and your team are available to deal with questions or queries. Perhaps it's best if they're of a more general nature of interest to everyone attending, in the Q&A or in the chat facility. And if anyone has any specific questions or any queries about product, etc., then are they able to contact you after the event and to discuss with you and your team their particular needs and requirements?
Yeah, absolutely. No problem at all.
Fantastic. Well, I think you've trusted me with the slides, Bisma. So on that happy note, we'll get cracking, should we?
That's great. Thank you. Thank you to Ian and thank you to Robert for the kind introductions. So I'll let you the next slide, Ian, please. Okay. So we're going to talk today about the availability of defective title insurance in commercial property transactions, and really going to give you a bit of an inside knowledge, because I think a lot of people already probably know how to get insurance. Most of you probably here at one point at time have obtained it, but it's sort of it's sort of behind the scenes, if you like, to sort of give you a bit more of an inside view of things behind the scenes, if you like, behind the curtain. Next slide, Ian, please. Not sure if the clicker's working, so I'll just click myself. Okay, so just a quick one in terms of a bit about IREDD. I mean, the company itself was established, we're part of a bigger group called Adler Fairways. Robert McNally and Moats Gamble, ex-partners at sort of quite big, large law firms, set up the business, and it was acquired by Adler Fairways back in 2023. But we're still very much IREDD branded, and we focus mostly in terms of, I guess, what I'd say differentiates us from traditional brokers is that, we are quite specialist. We're not sort of your usual broker. And the difference is pretty easy to explain, because we sort of we pay a lot more care and attention, and we're very detail orientated as well. We're not some sort of just a post box, if you like. And what we look to do is essentially, look at providing insurance-backed solutions. So we always say we don't buy insurance, we sell your risk to the insurer, essentially. So next slide, Ian. Don't know if the clicker's working at your end. I think I have to click it myself. Okay. So things to consider when you're looking at getting insurance. Okay. There's a lot of I want to demystify a little bit about the market, if you like, because there's a lot of obfuscation, if you like, because there's lots of underwriters, managing general agents, brokers, authorized representatives out there, and it's difficult to know who you're dealing with. You have, for example, Stuart Title. They are a quality insurer. They're A-rated. You have Dual. They're an MGA, so they write on behalf of a number of different insurers. You have MX, again, very similar. Then you have First Title, again, they're an insurer. You might have the likes of Countrywide and LIS, and again, they're underwriting agents. They'll write on behalf of an insurer. So, and then you have brokers like myself and Aons and Marsh and other brokers. And essentially, we are sitting in between the client and the broker, and we would go to the market so that the client doesn't have to take that task of knowing who to approach, who to go to. One of the important things to sort of, I think, note is that we as a broker are the only party that really owes a duty of care and allegiance to the insured, because the insurer at the end of the day is obviously acting for themselves. The lawyers obviously have a duty to themselves, and so as a broker, we're probably the only party in that transaction between the insured and the insurer, taking that duty of care towards the client. Fair presentation of the risk, it's really important under the Insurance Act 2015. There are quite onerous obligations and regulatory aspects of IDD, and they're quite hidden and downplayed sometimes, but it's really important because it's not something to be taken lightly. So using a broker does mean that you kind of you know that you're getting someone that is approaching the market and taking that step for you in terms of making sure they've reviewed the market and you've got a policy there that hopefully does what you need it to do, and ensuring that all the information is passed to the insurer as well. Sorry, I keep getting things popping up on my screen. So how underwriters assess the risk, there's a lot of questions that they'll ask, and we'll talk about it on another slide a bit more, but you might be surprised sometimes, but there's a reason behind why they ask the questions that they do, because they're essentially trying to formulate a defense in the event of a claim. The scope of LI coverage, I mean, there's probably 60 different types of legal indemnity risks out there, and I won't name them all, but common ones you probably already know, covenants, search it, cover, chance or JR, you name it. There's a whole host of issues out there, and insurance essentially, it's there to put together by taking into account the legal issue itself. Okay, when we're looking at getting insurance, we're looking at what the issue is, what's the commercial scenario we're looking at, and whether there's any other insurance policies in place that we need to consider. So there's quite a bit there. There's a lot of policies available that you can get, and when looking at the kind of cover, there's a lot of regard taken to a lot of external factors. And when you do take out a new policy, okay, there's lots of questions, and I touched on this, that the insurers will ask, the who, what, where, when, and why. And you might think, why are all these questions being asked? But they're really important because it helps the underwriter formulate a good understanding of the situation. And as a broker, often these are questions that we will ask preemptively, preempting what the underwriter might say. We will ask these at the first hurdle, so that there isn't a lot of back and fro between the insurer, between us and the insured. So we try and gather all the information, if you like, so that we can do the best presentation possible to the insurer, so that make it easy for the insurer to understand the issue, to see if there is a potential mitigation to the risk, and to hopefully get a yes answer from them. So there are a lot of questions that we'll ask, that will be asked, but there's a reason why. And limits of indemnity, when we look at that, it's an interesting one, because when it comes to limits of indemnity, it's either property value or a GDV value that usually is taken into account. However, I think we have to think about, is it really appropriate? Because it's not appropriate in every situation. I mean, if you've got a lender, for example, who's taking out the policy, they're not really too concerned about property value and GDV. They're more concerned about their loan value and ensuring that have they got enough cover to cover their loan value should a risk arise and there is a total loss scenario. Will they get back what they've lent to the insured? So one of the things we always look at is limits of indemnity, and we will take into account, you know, who is the policy for? Is it for the owner? Is it for the lender? Is it going to be a continued use? Would there be a development? You know, really trying to understand what are the actual losses going to be, and how do we put a value on those losses to determine what's an appropriate limit of indemnity? Because not always will the property value or GDV always be the right limit to go with. And for example, you know, judicial review risks and rights to light. So with JR cover, which is judicial review insurance, if you've ever taken it out following the grant of a planning permission, you won't always ask the insurer to give you, you know, 60 million cover if that's your GDV, because that may be way too much insurance. That's not your actual loss, because what you're looking to cover is the losses that you suffer potentially in that JR period if a JR was to arise. And then obviously the loss in that land value that you might have if the land's worth less without planning than it was with the planning, had it got the planning permission. So it's really, there are questions that we will always ask and probe into, because limits of indemnity it's important to get it right. And in situations especially where, you know, the value might also increase in the future. So if wind farms is the classic example we get, where, you know, the enterprise value of that will, once it's finalized and finished, is a lot more than when it initially starts on the ground. So we look at, sometimes you can stage a policy where you can have escalator clauses in it where you need it to increase over time, or you may even stage a policy where you take it out at a certain stage at a particular limit and increase it to a higher limit at a stage 2, where then you will do it at the full EV or the GDV value at that point in time. So it's always worth considering when you take out a policy what's going to be appropriate there. And it also avoids a particular risk of averaging. If you underinsure, then there is a risk that in the event of a claim, you know, averaging will apply, where essentially, you know, let's say you've insured the risk for 50% less than what you should have done. You know, the insurer will, in the event of a claim, argue that you underinsured it and only pay out 50% of the claim. So it is an important thing to consider when looking at GDV. So there is a balance, obviously, that you have to sort of strike. Next slide. Quality of the insurer, and we talk about, you know, does it matter? Well, you know, I'd say absolutely, it's critical. You know, we only approach, as a broker, we're only allowed to approach A-rated insurers. For example, Stuart Title, they're an A-rated insurer themselves. So it really is critical that you are using an A-rated insurer. And if you're using a broker, then hopefully they are also only using A-rated insurers. It's important because funders, the quality of an insurer will matter significantly, because funders will want to sometimes trade their debt, securitize, participate it down. So having a better quality insurer, you know, allows them to maintain that value of debt, because it's an A-rated insurer. It is really, really important. And if a publicly issued debt or bond, any credit reference agencies, you know, they'll always ask us to ensure that the quality of the insurer is checked, and it is important to certainly sort of financial institutions that we deal with. Investigating the problem and is insurance really the answer? You know, there are a number of options. Obviously, you can take out insurance, or you can try and solve the issue. We always take the view that if you can solve the problem easily, cost effectively, and in reasonably quick time, and it doesn't delay your transaction, then that problem should always be, you know, try to resolve it. But if you can't, then obviously insurance is there to help and assist. It provides comfort, reassurance. I mean, it won't always solve that underlying problem. The risk will always stay there, you know that. But essentially, what the insurance policy will do is transfer that risk away from the insured for a premium to the insurer, and it gives peace of mind, and it can allow the transaction to carry on. But yeah, I mean, if the issue can be sorted out in reasonable time and reasonable cost, then that should always be something that should be considered first. Disclosure. So I guess for me, there's sort of two types of disclosure here. There's ones that where we talk about where we disclose the policy. So at auctions, for example, you often see sometimes in auction packs and that policies are put in there. And I would always say it is one because obviously when you take out a policy, one of the conditions of the policy is that it's not disclosed to anybody. You may be allowed to disclose it to a potential prospective buyer, but at auction, not everyone at the auction is going to be a prospective buyer, right? So there's going to be some people there that aren't really looking to buy that particular property. So what we would say is before disclosing the policy or putting it up in some sort of deal room or public domain area is always check the terms of the policy around disclosure, and if in doubt, speak to the broker that got the policy. Speak to the insurer if you need to, because it's better to be safe than sorry. Because we have seen this happen, and a policy has been inadvertently disclosed. Inadvertently, not on purpose, but nonetheless, by doing so, unfortunately, they invalidate the cover. Disclosures, another aspect of disclosures is disclosures that are made to the insured. So often sometimes, you have CPSEs and obviously they have to be asked. There are standard questions, but often I wish sometimes we didn't have to ask those questions, because sometimes when they're asked, if the answers aren't particularly great, then and they highlight more things that could potentially put an insurer off from wanting to insure that risk. Sometimes not knowing is better, but sometimes knowing too much, it can be a good and a bad thing. It can be bad in a way if you know that there's sometimes knowing too much can mean that insurance might not become available or become a little bit more at a premium cost. But this isn't something that you can get away with. And obviously we must always disclose any information that we become aware of that is pertinent to the risk that you're looking to insure. It's critical. If it isn't disclosed, you look at potentially invalidating the policy later down the line. So disclosure is really important in both aspects. When you're disclosing to the insurer, and if you're disclosing the policy to a potential buyer, always check the terms and conditions of the policy to ensure that it's allowed. Next slide. So a few tips and traps, and I'm going to talk here particularly just about a specific case study example where I was approached to obtain cover for a restricted covenant risk. Okay, and we were looking at there was a specific individual that we knew had the benefit, and there was also a potential residual risk that there could be other parties that had the benefit of this cover. And when we approached the insurer for cover, they'd offered us an option where they could cover just the residual risk, or they could cover everything, including the one party that we knew would more than likely have a claim. And the insured offered two options on the quote. Unfortunately, as we sort of moved through the transaction, it transpired that the insured had already obtained a deed of release with that one party that we knew about for a seven-figure sum. And had they have not done that, we could have insured it for significantly less, and I mean significantly less. So I guess my point here is that when you're looking at insurance, never just assume insurance won't be available because you already know this party's got a right of way or got the benefit of a covenant and just enter into a deed of release, try and sort it. It may be that we might be able to insure that party as well. Or we might structure a policy where you can obtain the deed of release and have the backing of insurance there in the background, have the comfort of insurance there. And I'd always say is that if you're ever in doubt, just always explore the insurance option first. Just give us a call, talk to us, talk to your underwriter, talk to your insurer, just to explore what is available, because the market has changed significantly, and it's constantly changing in terms of what insurers are prepared to offer. It's not a computer says no system anymore. A lot of the sort of commercial insurers that we work with, particularly with Stuart Title as well, they're prepared to think out of the box, the underwriters. It's not a case of okay, no, but this doesn't fit and we can't do it, they're prepared to think a little bit more commercially. And if you can provide them with some sort of a defense or mitigation to a particular risk, they can create something pretty bespoke for your particular risk, because that's what it's about. It's not just trying to get your risk to fit into the insurance policy, it's getting the insurance policy to fit your risk. So I'd always say, if you're ever in doubt of whether there's an issue, if it's not something that, as I said, can't be solved easily, then always explore if it can be insured first, if insurance is an option. Excuse me. I think that's pretty much the end of my slides, Ian. If anyone has any questions, I'm more than happy to answer them now or later on, or people are more than welcome to drop me a line later on. And I apologise, I sound very nasally at the moment because I am down with a cold, so I've tried to get through this as quickly as I possibly can without going into a sneezing or a coughing fit.
Bisma, thank you so much for your guidance there. That was really interesting. Now, I was about to say you've done very well, because I know yesterday you were saying how you were suffering, and today, yes, you stood up very well despite your ill health. So thank you for that. Yeah. What I normally do in webinars of this nature is say, rather than use the sort of the question feature and the chat feature, if we concentrate on the chat feature, does anyone have any questions of Bisma? While we're waiting for some questions, I have another slide, Bisma, with details of your contact details, and your colleagues are on slide there. Are there any questions for Bisma? If there aren't, we will push on. If there are, happy to take them. Bisma, as far as your experience is concerned, just one or two things from my perspective.
Yeah.
This idea about bespoke policies and teamwork, I think, is something that lawyers and law firms need to understand and appreciate. The fact that there might be something novel to them that you and your colleagues have encountered in the past, and therefore you might have someone who's sort of scurrying away trying to find an answer to an issue on the basis that they've never encountered it before. Sometimes a word with you or your colleagues can be really refreshing on the basis, well, yeah, we saw this, or we've dealt with this in the past, or perhaps a policy, an indemnity policy isn't appropriate here, but this is a walk around or a way around the problem that we've encountered in the past. So do you think that's a fair comment?
Yeah, absolutely. I mean, we'll always say, if you pick up the phone and talk to us, if we don't think insurance is a solution here, we think it's not something that's going to work, we'll say that, but where we think we can structure something, and we're doing that regularly on lots of risks that we often see, particularly with covenants and mines and minerals, where you're already on notice, right? And you think, well, you can't insure that, but no, actually you can, and we have done it. We structure it with an excess, we do an agreed conduct policy where the insured sort of taking a little bit of risk, so is the insurer. So everyone's kind of working together to that way you get the insurance policy, and you kind of work together to take a bit of that risk and work through it. So I would always say, if you're not sure, it's always good to speak to someone, because that way you know if it's something you can insure or you can't. And if it's something that we don't think it won't fall into the legal indemnity market, it just won't be that. We will say that, but where we think we might have done, we can put something together. We'll absolutely we'll do our best, and we'll tell you that.
Yeah. And on the issue of sort of disclosures, etc., am I right in thinking that you might be able to be creative with regard to a policy where, for example, there's been a disclosure? You might be able to create a policy, but of course, sort of exclude any liability arising from that disclosure, but still create a policy. Is that fair? Or
yeah, absolutely. So look, it might be that in a disclosure somebody says, oh, we've already there's been a bit of communication with X, Y, and Z. It doesn't mean that automatically the insurer might say, okay, we'll exclude that party, but they might say, actually, we will include them, but they'll structure the policy maybe with an excess with regards to that party. But disclosure is really important. It's making sure you disclose that information, but we try and paint the best picture we possibly can to the insurer with the information that we get. So, not to scare them off, but to so that, they have all the information there, but, it's not, at the end of the day, it's not the end of the world if there has been a disclosure. We just need to make sure we present the facts in a way that the insurer can understand, and hopefully we can still get a yes answer when it comes to insurance.
Got you. And then the last question, which again is something that can arise in practice. You might have a site and there might be some unknown restrictive covenants. There might be an issue with regard to a connection to a drain or a prescriptive right, etc. So can you create a policy that sort of deals with a number of risks rather than the client having to buy, say, 4 policies for 4 different types of risk? A, have you encountered that? And B, is it possible to create a sort of a bespoke policy that covers a number of risks?
Yeah, absolutely. I mean, we got to look at the situation with every client and every situation. It's always different. Okay, is it a developer that's building houses for individuals? Will they need to splinter the policy further down the line? So it just depends on the client. What's the transaction? What's the development going to look like? But when it comes to having multiple risks, you can get a single policy to cover multiple risks, not a problem. And if you want to have separate individual policies per risk, you can do that. But that's a lot more premium you're going to be paying, because you're going to have a limit for every single risk. And in reality, do you need that? Probably not. You can probably wrap all of the risks into a single policy under one limit of indemnity and have that. But like I said, you could have funders in the background that might say, well, we want it structured differently. I mean, there are some risks that you have to have separate policies for, like rights to light, for example, or judicial review. I mean, even with rights, like, you can sometimes add additional risks into those, but there are certain risks with JR, for example. It's only there for that risk is only around for a particular period of time, so you would have that as a separate policy. Excuse me. But other risks, your easements, your mines and minerals, or your covenants and third-party rights, you can certainly we would certainly recommend taking into account the scenario, the background of the transaction, that it might be sensible to wrap those all into one policy under one single limit of indemnity. But you have to think about what's the transaction. Are they going to be, what are they building? Is it a big supermarket, or are they looking to sell plots on? But yeah, absolutely, you can wrap it all into single policy.
Okay, thank you for that. And the last question really was, you touched on rights to light there.
Yeah.
As I understood it, there was a time where insurers didn't really have an appetite for rights to light. But am I right in thinking that that's now not the case, and that insurers are back in the market for right to light?
There are. I mean, some insurers have come into the market, were doing it, and then they've backed out of it sometimes. And so this happens with with many risks, but with rights, like we've seen it where some insurers were doing cover and then they stepped out of it, but then other new entrants have come into the market and are offering cover. So there's plenty of appetite and capacity out there for rights to light, but it changes, and that's where obviously with a broker, we know when we see a risk coming into us and it's the rights to light, well, we know there are particular insurers out there that deal with it, so we'll only go to those markets. If it's a complicated mines and minerals risk where we already know we're on notice, again, we'll know from experience there are probably only a couple of insurers that will want to get involved in something like that, where they're going to need to do an agreed conduct. So yeah, I mean, rights light, the market's always changing, the insurers are always, their appetites are always changing as well, and the premiums do vary as well, insurer to insurer. But yeah, I mean, Stuart Title do rights to light. There's a number of insurers out there that are doing it, but they do change sometimes in terms of their appetite.
Yes. So I mean that's why your services are so invaluable, in that you can know who's in the market and who's not in the market. Because I think that's the other funny thing with insurers, isn't it? I've encountered this in the past, that the insurance market is a small world, and if you go trolling around insurers with a risk, very quickly they know about it, and whether it's conscious or subconsciously, well, if everyone else doesn't like it, well, perhaps we don't. Whereas if you can target, if you know an insurer that's currently in that marketplace, you can go directly to them. A, you're saving time, and B, you're not sort of passing around the competitors the fact that there's a risk in the market that wants insuring. So there's sort of a double benefit there. Would you agree with that, Bisma?
Yeah, I mean, absolutely. I mean, you don't want to send it out to 12 different insurers. You have to think about the risk that you're being asked to insure, and think about the markets out there that have the appetite for it, and
Yeah,
who can write it, and who will be able to write it in time if it's an urgent risk for the client. They need a policy fairly quickly. You really have to think about it and take consideration of the risk, and then approach the appropriate markets and the insurers for it. It's not always a case of just always going to insurer A, B, and
yeah.
C. And D. You've got to think about who's the right person in the insurance market to approach.
Got you. We have a question from Robert. Could you please comment upon non-invalidation clauses and protection for successor clauses, Bisma? Would you mind taking that one for me?
Yeah. So non-invalidation clauses in a policy, and successor provisions of the policies will automatically benefit a successor. And what that means is having a non-invalidation clause is really important, because it means that if you're a successor of a policy, the policy won't become voided just because the previous person had the benefit of it, did something to invalidate it. You still
Right.
get the benefit of a policy. So one of the things we always do check, again as a broker, is that the policy does have non-invalidation provisions in there. Because as a successor, it's really important that you know that you've got that
Yeah.
cover, because otherwise you take out a policy and you later find out, well, the first insured, if you like, did something to invalidate it. Why should
Yeah.
insured two suffer because of that? And it's important because sometimes you can have a policy and you might have not just the owner but the lender or the lessee's covered as well. And so when you've got multiple insureds, it's unfair if one insured does something to invalidate it. Shouldn't
Yes.
mean that the others then fall foul of that and don't have any cover. So yeah, though they are important, and it's important to check that you have that in the policy, and it's one of the things we always look out for as well, to make sure that an appropriate non-invalidation provision is in the policy.
Yeah. Bisma, so is that quite a common clause
It
in the
is.
commercial context?
It is a common cause, but it's always important to just check that it's there, and
Yeah.
that the successors as well, you're covering the provisions there, that the policy will also cover successors, because sometimes it may not. And it's
Yeah.
just important to make sure that it will cover successors.
Okay. Thank you for that. Well, Bisma, that's fantastic. Thank you. If you can stay with us.
Yeah, absolutely. I'm
and
here.
if we have any questions at the end, but thank you. And as I say, I'm conscious of your voice and your health. So I'll take over now, if I may, and just put my 2 penneth in for a little while, and then we'll have a look at some questions at the end. So thank you for that, Bisma. What I want to do now is to consider some of the practical implications of title indemnity insurance in the commercial property context. And look at some tips when considering or obtaining defective title insurance, and then look at some of the traps that can be encountered. Again, I repeat, massive thank you to Bisma and her colleagues for sharing her expertise. And of course, it goes without saying that given some of the issues that Bisma and I have just discussed, and some of the issues that she mentioned in her presentation, IREDD are ideally placed to assist and act as a sort of conduit between your client and the insurers. So as I say, the slides will be made available to you, and Bisma and her contact details are on her slide. I think it's slide number 9 in the slide deck. So title indemnity insurance, let's just have a look at this. And for those of you that haven't had the misfortune of listening to me in the past, I qualified as solicitor many years ago, specialized in conveyancing, and for the last God knows how many years I've focused in on CPD training for solicitors conveyancers in both a residential and commercial context. And again, there's no doubt at all that title indemnity insurance in either setting is really useful to enable transactions which perhaps in the past would have fallen by the wayside or die a death, resurrecting them or allowing them to proceed to fruition. So certainly useful. And one of the things that I've spent a lot of time working with and looking at is the context of title indemnity insurance in relation to restrictive covenants. And one of the things that I particularly like about title indemnity insurance policies with regard to restrictive covenants is that a number of them will enable funding for applications under Section 84 to vary or remove restrictive covenants. as well as providing a shield or a sword with regard to litigation and looking at diminution in value with regard to sites that are sustain loss as a consequence of enforceability or unenforceability. As Bisma mentioned, there are standard policies and bespoke policies, and again, it's possible to sort of stack up risks and have one policy for them, which has a number of advantages, as Bisma mentioned. But I think the other important thing is, although there are online policies that can be ascertained for what I would describe in my naive way as sort of the simple risks, it's also important to understand that there are bespoke policies that are available for specific risks, and Bisma and a team can help you and point you in the right direction in that connection as necessary. I think someone's got their microphone on at the moment. If you could turn your microphones off for me, that'd be great, because I'm getting a little bit of interference. I don't know why, but I am. But if you could do that for me, that'd be fantastic. In the meantime, some tips with regard to defective title insurance. Bisma touched on this. Always watch out for client objective. What's the purpose sitting behind this transaction? In the good old days, when I used to do a lot of this work, I had some clients and they were very focused, very specialist. They would only acquire sites in their particular niche, and it was great. We knew what their objective was. We knew what their key issues were. Due diligence was an absolute dream. On the other hand, you'd have some other clients, and I remember one chap in particular who was, he described himself as a property developer. He wasn't, he was a speculator. He would buy sites because he thought they were cheap. He would buy sites because he thought there was an angle with regard to planning. He would buy sites on the basis that he knew that Marks and Spencer's distribution depot needed more hard standing for its vehicles, and therefore this site was ideal given that Marks and Spencer's depot and warehouse was next door to us. So he would speculate and buy at auction and buy all over the place, off plan, off the market, all manner of different things, distress purchases, you name it. And he wouldn't have an objective. It would just be an acquisition, and I'll either flip it or I'll keep it in a sort of medium-term land bank or long-term land banking. And again, the fact that there wasn't an objective with regard to the acquisition could cause some issues on the basis that a scattergun approach would be necessary with regard to due diligence. Fortunately for that client, we never ever took out any form of defective title insurance. You would always take a view if there were risks or issues with regard to the title, and title indemnity insurance wasn't on his radar, and I'm delighted to say that, on the basis that it may have been a problem placing him to an insurer or to an insurance broker, given that he didn't really know what he was intending to do. It was just a question invariably of either selling quickly or selling at some point in the future when problems had been resolved or when market conditions had changed. Always important, and again Bisma touched on this, that defective title is a solution, but it's not necessarily the only solution, and it may not necessarily be the correct solution. So again, in the example I've just given you there, if we're hanging on to a site and building an industrial shed on the site for our own trading activity, the fact there's a defect in title may be of little of no consequence to us. If, on the other hand, we're acquiring a site with a defect in title and we're contemplating developing that site and selling it on to a pension fund, or undertaking plot sales, or a resi developer coming in alongside, then the problem that wasn't a problem for us where we were holding the site and using it for our own purposes could become a major problem. We also need to think, and that leads me to the next point on slide here, about what the future holds. And again, it was interesting, really interesting, hearing what Bisma had to say about successor entitled clauses and non-invalidation clauses, successor clauses, etc., so that we are sort of future-proofing the policy and ensuring that it's more attractive as far as prospective buyers are concerned. So that's really interesting. Future land use or development was always a nightmare for that client that I was mentioning, because he wouldn't have a clue what to do, and he frequently used to be mortified or horrified as to what he was intending to do, and whether or not our scattergun approach with regard to due diligence would identify an issue that latterly would become an issue when we came to dispose of the site. So next thing, does the client understand the defect? So does the client appreciate what the defect is, and does the client, and particularly this applies to sort of unsophisticated clients, does the client understand that a defective title insurance policy does not mean the problem has gone? It just means the problem has, in essence, been converted into some form of monetary value that the policy is designed to protect. And again, important to understand and appreciate when we're future-proofing policies, can levels of cover be topped up? And perhaps that's something we could ask Bisma at the end of the session to see what her view is with regard to topping up. Certainly, I know that a lot of insurers will have inbuilt increases sort of related to inflation, etc., which are clearly important, clearly beneficial. What about traps then? Well, again, this isn't really an insurance issue, but is an issue for commercial property lawyers and indeed residential conveyancers generally. And again, I repeat, I come at the conveyancing process from a very defensive position in that I see claims and nightmares and client complaints. And therefore, as a consequence of that, what can we do to protect ourselves? Well, there's a number of things that are worthy of explanation. First of all, make sure the client is aware of the cover provided. A copy of the policy with an explanation as to what the policy is in fact covering, I think is important when the policy is taken out. The extent of the financial cover, is it sufficient? Market value, purchase price, amount of loans secured on the property, etc. Is that going to be satisfactory for our clients' purposes and needs? This third point that I mentioned, the duties and obligations that are owed to the insurer, again, important. Often the client, particularly a commercial client, is anxious to get the deal done, anxious to get the site brought in, and incredibly busy, and therefore some of the detail or the minutiae of the transaction, of the documentation, isn't carefully considered. So I do think it's important that we explain the duties and obligations that are owed by the insured to the insurer. And what I do in a residential context and suggest for certain commercial clients, it may be worth repeating those duties and obligations when you are closing your file and indicating to the client that the matter is now at an end. A timely reminder about the fact that we've written to you in the past and explained, having taken out a policy, your duties to the insurer. Here's a reminder as to what those duties and obligations are, and the fact that they are ongoing. So even though I, as your transactional property lawyer, I'm dropping out of the picture, the insurer is your sort of permanent friend, your permanent support, and your permanent shield. And again, I would always advocate and always say when I'm training commercial property lawyers and indeed residential conveyancers, that's one of the things you should be reminding clients about when you're closing your file. The next thing is really, again, something that Bisma mentioned when she was talking about disclosures, etc. Should an investigation of the defect in title be investigated? Well, there's a sort of two ends of the spectrum here, aren't there? There's, first of all, yes, I want to do that, to see just what the problem is and to see what solutions are available to our client. So the inquisitive nature of the lawyer would suggest it's worth undertaking that investigation. And it might also be prudent to undertake that or those investigations to ensure that we've got sufficient information that we can give to Bisma so that she's in a position then to place it with an appropriate insurer or to give us advice about what we should be doing or covering. And of course, these days with finance and costs being often at the forefront, in fact, invariably being at the forefront of transactions, to see if there are factors that we can discover or factors that we can notify the insurer or the broker about that could mean that we can drive down premium. So there is a number of potential positives in investigating a defect in title. A, we know what the defect is. B, we can ascertain what alternatives or options we have with regard to resolving the problem. Then making sure that we've got information that we can give the insurer, so the insurer is not going to come back to us and say, well, we want to know this, we want to know about that, and to see if we can ensure that, given all the facts, we can get the best price possible with regard to premium. On the other hand, there is a risk, and the main risk is this point that I make, second bullet point on the slide here. Risk that investigation creates a disclosure issue to third parties, making it impossible to insure, and which invalidates cover if it's obtained, or means that Bisma and her friends have to carve out risk associated with that disclosure, in reducing the effectiveness of a policy. And I think the message that Bisma made loud and clear, and a message I'd like to reiterate, is this point about, if we are undertaking investigations relating to risk, check with the insurer beforehand. And if there's any doubt, just don't investigate. You're far better off, obtaining a policy, rather than doing something that would mean a policy can't be obtained, or will be harder to obtain, or will be more expensive. And again, make sure clients are aware of those issues too, because a commercial client might have an environmental team, a planning team, etc., that's on site or having a look or talking to neighbours, etc., and all of those sort of third parties could potentially cause a problem with regard to disclosures. Going on, if I can, to the next slide. Always check what policies cover, and always make sure that the client is aware of what the cover is. And again, I can speak from bitter experience on this. Having acted for some commercial clients, they don't want to know. All they want to know is a policy is being taken out and that we can now push and drive this deal forward. They only want to know when there's a claim on the policy or a need to review just what the policy covers. And the number of times I've attended meetings and the client has been surprised by the content of a lease, the content of a policy, the content of a report that's been obtained in the past, on the basis that I've never seen this before, when the reality is it has been provided to the client in a report on title, or buried in an advice letter, or something of that nature. So I do think it's important that clients are spoon-fed as to what the policy covers. And that could be cover relating to damages or compensation, diminution in value, demolition or alteration of the property, costs associated with bringing or defending proceedings. And this last point, particularly with regard to restrictive covenants, which I did flag up earlier, is an interest of mine. Where we've got a restrictive covenant, or a property potentially burdened by a restrictive covenant, and we're taking out a policy providing protection relating to it, does that protection, does the facility provided by the insurer leave open the opportunity to make application to Land Tribunal under Section 84? Just recently, in fact over the weekend, I was doing some work with regard to Section 84 applications, and looking at scenarios where a developer was aware of a restrictive covenant, aware that there was potentially land and an owner of that land that could enforce the covenant, but then sort of cracks on with development, builds out, and then seeks an application under Section 84 to vary or remove, where an aggrieved party then shouts or starts shouting foul. And this idea about being aware of a covenant, breaching the covenant cynically, and then seeking permission via the tribunal to vary or remove, was looked at in a case called Alexander Devine, the Children's Cancer Charity. Recent case, which is quite similar to Alexander Devine. Client, this was a resi client, was aware of covenant, aware that covenant was potentially enforceable, having been advised as such, undertook development in breach, then realised that the sort of notional risk associated with breach was an actual legal risk, and then took out a policy. And the tribunal ordered that the covenant still be varied, even though the applicant was aware of the covenant and carried on development notwithstanding. And what the court said there was, well, this was different on the basis that the advice that the client received was not unequivocal. It was sort of, well, it may be, it may not be, and therefore the fact that the client had some doubt meant that it wasn't a cynical breach. The interesting thing with that case was, well, this was a resi client, and perhaps the test is different with regard to a commercial client, as we saw in the Alexander Devine case. Anyway, I digress. Practical issues. Who should take out the policy, the seller or buyer? I'm going to ask Bisma about this in our little Q&A session before we finish. My view is it should always be the buyer that takes out the policy. but I'm willing to be persuaded otherwise. And I sometimes worry about, is there existing cover or is there other cover that the policy might duplicate? As a transactional property lawyer, do I need to warn the client about that? And again, this point I made earlier about when you're closing the file, a reminder to the client can't do any harm whatsoever. That just about covers all I've got to say. I mentioned auction sales. I was delighted to hear that Bisma did likewise. I did a webinar this morning on online auctions, in particular, and online packs, and this issue of disclosure of policies does worry me, particularly with regard to online auctions. And again, be careful if a seller is taking out a policy. Do you want some form of warranty or provisions in the contract protecting your client's position, or would you do a due diligence exercise with the insurer? Again, interested to hear what Bisma has to say on that. So, ladies and gentlemen, we've got approximately 10 minutes to deal with any questions. Does anyone have any burning questions? If so, please put them in the chat facility. Meantime, Bisma, just some views about some of the things I was saying there. This idea about should the seller or the buyer take out the policy, what's your view?
I agree. I think the buyer should take out the policy. There are situations where the seller might be named on the policy if they're if it's if the sale is, for example, it's the buyer is taking an option over the land. And in that case, you may have the seller still on the policy, and you may also have the buyer on the policy. So there may be situations where the seller may take it out. Perhaps they want to take it out before they sell the sites. They're trying to get an insurance policy before they've even got a buyer ready. So there are scenarios where the sellers do take it out, and that does make sense. But more often than not, when it's a transaction, usually we always have the buyer will be the named insured, because essentially they're the people that are going to benefit from the policy. In terms of who pays for it, well, that's a discussion between the seller and the buyer and a negotiating point. But essentially the policy is there to benefit the owner of the land, which inevitably will be the buyer.
Thank you for that.
So
good, thank you. And this point about duplication of cover, have you ever encountered that?
We have, so if you this is always, it's good to just check if there are existing policies in place. So when you look at the legal issue, when you look at the commercial transaction, it's always good to look at the insurances. Well, what is there any insurance already in place? If there is, then is it adequate enough? Do we need to perhaps go back and revise the cover, or do we need to top it up? Because if you duplicate it, then you almost have double insurance in place. So it is important to always check if you have an existing policy and cover, is it still doing what it says? Is that insurer still around? It's always important to just check, and it might be that it's absolutely fine. It just needs to be, the limit of indemnity just needs to be topped up. Often sometimes we'll just be asked to review a policy and just increase the limit of indemnity on it, and it could be as simple as that. But if you need to add on a particular risk, then you might find that if that original insurer isn't prepared to add on a new risk, then you might have to go and get another policy for the new issue, the new defect.
Thank you for that. And this point about restrictive covenants and application under Section 84 to vary or remove, again, in your experience, do most policies facilitate such an application if it's with regard to restrictive covenants, Bisma?
No, well, mostly policies generally obviously will exclude you doing anything that's going to try and do that. But as I said, you can, if that is the plan, to make an application to Land Tribunal to do that, then obviously you need to tell the insurer. You need to ensure that that can be part of the policy terms and conditions, that you'll be making that application. You'll do it with the guidance of the other insurer. But otherwise, if you're going to do that, obviously people will be put on notice, and that could potentially get someone coming out of the woodwork. So it's not you can't have a policy and just go and do it. You need to check with the insurer, is it allowed under the policy? Because more often than not it isn't. But if that's the intention of doing it, then when you're taking out the policy, it's something to tell the insurer that that's your intention to do that. And then it's a question of, okay, well, why do you want insurance? Is it there just to get in the background in case you're unsuccessful at removing that covenant?
Thank you for that. That's a good practical point. Bisma, we've had a chat message from John Buckley. Hi, John. in an auction pack, could a seller say that an indemnity policy exists without saying what it covers, and the seller will disclose a policy when asked to do so by prospective bidders? What would you think about that as a sort of a route map round the problem?
It's a tricky one. I mean, I
It is,
think
isn't
even
it?
just saying that there is a
Yeah,
policy, right? You're
yeah,
potentially you could be alerting someone
yeah,
that might have might want to actually make a
yeah,
claim on that policy. So
yeah.
I would say just check the terms and conditions of the policy. I would prefer, it's a tricky one, it really is. I think if you want to do that because you think it will get buyer more comfortable, then you need to just check that with the insurer. I think check on because I would be very, very cautious about just even saying that. I think it's always
Yeah,
better just to check, and it doesn't take long to check with the insurer. You can call them up and they'll say, "Don't do it," or they'll say, "Okay, that's fine," or phrase it in this way, and we're okay. And then you've got the cover of okay, you followed the route. You know, you've done it properly. You don't have to worry about it becoming invalidated. But just tread cautiously because even that wording, could. Might upset an insurer. So
yeah, fantastic. Thank you. And then finally, Bisma, so if people want to contact you, is everything directed through you, or do you have colleagues? I know Mr. McNally's with us. Do you have colleagues that can assist, or
yeah,
how do you work as an organisation? If you can just sort of share that.
there's a team of 5 of us, 4 of us actually at the moment with I've only got 3 details on the moment, apologies. But yeah, so you can contact myself or any one of my colleagues on there, and we'll be happy to pick up the phone or respond back. We do generally only tend to focus on more of the commercial development stuff.
Yes.
That is our focus, and that's kind of where we add the value rather than sort of the residential day-to-day transactions. We do deal with residential developments a lot, and we do assist a lot of housing developers and clients with regards to that. But our focus is mostly on the commercial risks. But yeah, you can reach out to myself or any one of my colleagues.
Okay, thank you. Well, that's absolutely fantastic. Does anyone else have anything to say in the chat facility? I'm conscious of time. We have a couple of minutes left before we're due to finish. While we're waiting, Bisma, thank you so much for giving us your time and expertise with regard to today. A massive thank you to IREDD for organising today's event and for Stuart Title to sponsor the event. And as Mr. Robert Kelly was saying in the introduction, it's nice to work with the team. I've met Mr. McNally in the past in your organisation, Bisma, and it's been a pleasure working with you. And if anyone attending today has any questions or issues, then Bisma and her colleagues shown on slide are the appropriate points of contact. And all that's left for me to do on behalf of IQ Legal Training, Stuart Title and IREDD is to thank you, Bisma, for your time and your expertise today.
You're welcome.
Thank everyone for attending today, because I know everyone's really busy and I know everyone's got lots and lots of things to do. So I'm grateful to you all for your time. We organise lots of webinars, CPD events, conferences, etc. If anyone wants information relating to those, then please let me know, Bisma, and your team. If you ever like to come along to our conferences, you're more than welcome to come along. You'd be very welcome to come along and see what we do. And in the interim, all that's left for me to do is to thank everyone for coming along, to thank you, to wish you all a pleasant afternoon, and to hope there's lots of exciting things in your inbox and nothing too nasty. Bisma, absolute delight working with you. Everybody else,
Thanks, Ian.
thank you. Take care. Thank you. Bye-bye. Bye-bye.
Bye-bye.